Good morning, everyone. We will get started in just a few minutes. As you are logging on, go ahead and drop us a comment in the chat box with your name and business. That way we know who is here today. Good morning, everyone. We will be getting started in just a few minutes. If you are just joining in, drop us a comment in the chat box letting us know your name and your business that you're with.
Good morning.
Good morning.
I see that John has his hand raised. Is there something that we can help you with, John? You are on mute.
As you are logging in, drop us a comment in the chat box letting us know your name and what business you are with, and we will get started in about 1 minute.
John, if you are there and there's something we can help you with, let us know. You can unmute yourself by clicking the microphone in the bottom left corner of your screen, or you can hold the space bar briefly while you speak.
All right, well, we will go ahead and get started. Hi, everyone. I'm Roxy Deer from the Wayne County Area Chamber of Commerce, and we are joined today with Cody Short to talk a little bit about the new tax credit that's been unveiled. This is something that not a lot of people know about, and we thought Cody would be the perfect person to chat with us about that. But before we get started, if you haven't already, drop us a note in the comments to let us know you're here and what business you're representing today. We're going to get started with a few upcoming chamber events. The first one is happening on November 17th, a week from this Wednesday. We will have a free professional headshot clinic. If you need an updated headshot and you are a young professional, feel free to stop by Bambly Insurance next Wednesday night. Next up, one of my favorite events is speed networking. This will be happening on Thursday, November 18th from 5:30 to 7 at Morrison Reeves Library. And this is a great chance to meet a lot of people really quickly. So you will get the chance to have 5 minutes with each person, and we will rotate you through the room so you can meet as many people as possible. Registration is still open. Tickets are $10 for chamber members and $20 for non-members, and that will include heavy hors d'oeuvres from Smiley's Pub and Garden. And I see that Daniel is posting links in the chat box. I think Lynette is helping him out as well. So if you have any questions, you can click on those links. Next up, we have Shop Small Saturday happening on November 27th. This is a day where we celebrate all of our small businesses and encourage you to get all of your holiday shopping done in local community. And we will have a savings passport that will be sent out for participating stores. Then following up with Shop Small Saturday, we have Couch Shopping, which is on December 1st and 10th. And this is an online event where we are Facebook Live with all of our local stores, and you can actually purchase items online that night. And last year we did over $5,000 in sales. So you'll make sure that you tune in those nights. Melissa, would you like to talk about State of Growth?
Sure, I'd be happy to. So this year we have had a quarterly series of state of events. As you can see with the image, we started with State of the Chamber, and then State of the Workforce, State of the Community, and our last one is State of Growth. This one, I think, is going to be a very full event. We have excellent panelists that will be joining us. Beth Fields from the City of Richmond, Jeff Plaster from Wayne County Commissioners and Eastern Indiana Regional Planning Commission, and Acacia St. John from Forward Wayne County. And the topics that we'll be covering that day are housing, broadband, and community development. Three things that we know are very important in attracting and retaining employees and growing our population. So we're excited to have a conversation with them. We will have some predetermined questions that we moderate, but then we'll open it up to the group just for an open Q&A and get some feedback from you for them and vice versa. So feel free to join us.
Thank you, Melissa. Our next event is December 16th, and that will be a blood drive happening at the Richmond Senior Community Center. And this one is filling up quickly, so if you're interested in donating, please get signed up today. And then the next event, the next night, is the Hype Night at the theater. All young professionals are invited to join us to see the best Christmas pageant ever, and we will be having dinner after that. And then, of course, annual dinner save the date on January 21st, 2022. We have a great lineup of award winners this year. So make sure that when those tickets go on sale, you get first dibs. And of course, we wouldn't be here today without all of our wonderful sponsors. You'll see that we have quite a few sponsoring our business education webinars, and we're excited that we have so many sponsors for today because we have a great speaker, and that is Cody Short with Brady, Ware, RKN. And Cody, I am going to hand this over to you. You're going to share your screen, and you're going to kick it off for us.
Very good. Thank you, Roxy. Let's see here. All right, looks like you guys can all see my screen, correct?
We can, and I do want to remind guests that we are recording and they can add questions to the chat box for the end of the session.
Very good. Thank you, Roxy. So we'll go ahead and get started. This is a new payroll tax credit that's kind of been introduced with all of the COVID stimulus packages that were passed by Congress over the last couple of years. As we see here, it's available for the years 2020 and 2021, and you can qualify for this credit based on your reductions in revenue on a quarterly basis compared to 2019 before COVID was even on our radar, or if your business was subject to a government mandated shutdown and that stopped you guys from operating as you did prior to COVID being on our radar at all. Obviously, today we want to learn about the credit. We want to learn what it takes to qualify for the credit, what it takes to calculate the credit, and then how we claim the credit as well. And then the process can be a little complicated. There's some special considerations we need to think about or be aware of while we're claiming the credit. So we'll go over those toward the end of the presentation as well. So this credit was first enacted in March 2020 when they did the big stimulus package to kind of keep businesses open to the best of their ability. And that's when they introduced that PPP loan program. And this was also in there in the same package that was passed in March. The big deal then, though, and why we kind of glossed over the retention credit at that point was that you could either do the PPP loan program or the retention credit. So obviously that PPP loan was fully forgivable. That's 100% into your guys' pockets. And that was always going to surpass the limitations that exist with the retention credit. However, you guys probably remember they passed another package at the very end of last year, there on December 27th. And that kind of changed the rules. And now businesses could have PPP loans. And now they could claim the retention credit as well for 2020 and then for the year in 2021 that was coming up as well. Which, I mean, kind of put us in a tight spot, though, because we went through the whole year of 2020 unable to claim those retention credits, and all of a sudden now we can claim them. That leads us to how we qualify for this tax credit. There's two major ways I kind of touched on there in the introduction. The first is if your business was subject to a government mandated shutdown that resulted in some type of change in your overall operations or reduction in sales within your business. And then the second qualifying rule or characteristic would be that you had a significant reduction in gross receipts or your sales or all your income for the year 2020 and 2021 compared to a same quarter in 2019. This leads us to the first qualification, which would be a government shutdown. And these shutdowns can be levied by either the federal government. So if the United States told us that your business needed to shut down, or it could be Indiana, Ohio, or it could have been your county or city government that required your business to be shut down or had to change their operation style. And so that leads us to the partial mandated shutdown that would qualify for claiming that credit. Here's a list of examples of partial shutdowns. This obviously isn't the only things that qualify, but you guys can kind of get the gist of it here. For restaurants and bars, a lot of them pivoted to carry out service only. As we kind of moved further on into the year, restaurants were able to have people inside again, but a lot of their seating was limited. So as long as you were under a seating limitation, you could not legally fill all of your seats. That qualifies as a partial shutdown, which would qualify in turn for claiming the retention credit. And then if you had your business hours altered, that would be qualifying as well. So if you had to close at 10 rather than midnight, if you normally close then. We saw lots of retail and like fast food restaurants have to provide like drive-through only service or only be able to sell online versus having people in their stores. And then there was obviously some big limitations at gyms and like entertainment focused companies. This reduction in quarterly gross receipts is our second type of qualifying event. And it doesn't have to be both. It can be either or once again, and you can kind of tie them together. Maybe you were shut down for the first couple months there in 2020, but then the entire quarter since you were shut down, you had way less sales and income than you did. You can kind of combine those together, mesh them together into a qualifying quarter there, and it gives yourself a bigger bucket of wages to claim the credit on. For 2020, you had to have a 50% reduction in sales versus the same quarter in 2019. So that'd be Q1 2019 compared to Q2 2019 or Q1 2020. Sorry. And then 2021, it follows the same rules, but the threshold for your sales reduction is reduced significantly for 2021. You only need a 20% reduction compared to 2019. And then this last bullet point, the language as the IRS states this is confusing, but basically you get to, once you have that qualifying event, which would be a 50% reduction in 2020 or a 20% reduction in 2021, you get to claim that until the end of the following quarter when you get back over this 80% or greater gross receipts. So basically one qualifying quarter ends up qualifying you for 2 quarters. 2 qualifying quarters in a row qualifies you for 3 quarters. And this is here. This is the way I like to learn. So I've brought some numbers up and showed the percent changes over here on the right. As you can see, Q2 for 2020 had this 55% reduction in gross receipts. And then since you get it until the end of the quarter when you return to 80% or greater, they had a 15% reduction here, but they get to claim that credit through the end of the quarter, but not for the next quarter because Q3 didn't have the qualifying event. In 2021, the rules change to where you only have to have the 20% reduction. So you see here in Q2 2021, they had a 25% reduction that gets them the credit for that quarter plus the next quarter right here. They have a 30% reduction here, so they qualify for this quarter and the next quarter from there. And then on like an aggregate basis, you can see the year in total for 2020 was really only down 10,000 in this example. They could claim it for 2 quarters here and Q2 and Q3 in 2020. And in 2021, if this is how it shook out in this made up example, they actually had a better year than 2019, but they are actually able to claim the credit for 3 quarters because of the way the rules are written. The reduction in gross receipts kind of leads us to defining what gross receipts are for calculating the retention credit. So that would include all of your revenue that you guys get that is earned in your normal business operations, basically the normal spirit of the business, the reason it exists. And also is going to include your interest, your dividends, any investment income you have. And then if you sold property, it's going to include the gain as well on all of that. Another item to note here, you need to calculate your income on the same accounting basis as your tax return is calculated on. So that would be your accrual basis of accounting or cash basis of accounting. That's something just to have on your radar and bring up with your accountant or your payroll provider as you go through these calculations. The rules for nonprofit businesses follow basically right in line with for-profit businesses, but there's big changes that you have to include the gross proceeds, basically the cash received for any of your investments sold, and the gross proceeds for any of your property that was sold at a gain. You don't get to reduce it by any basis that was held previously, unfortunately. But on the other hand, if you sold a lot of these investments in 2019, you might be in a position where in 2020 and 2021 you didn't sell those, and you might end up qualifying on that side. There are limitations on qualifying for the credit. The nature of the credit was to assist small businesses. And I mean, the IRS is pretty generous in defining the size of the businesses. They use basically how many full-time employees are employed. And they define full-time employees as people who either work 30 hours a week or 130 hours per month. And that is calculated on a monthly basis over the year, and you take that number into each quarter. So if you have a lot of part-time employees that don't reach these thresholds, you could have a lot more than 100 or 500 employees, but still qualify because they aren't necessarily a full-time equivalent here or full-time employee. You'll see here, if they have over 500 full-time employees, you're ineligible to claim the credit overall. If a company has between 100 and 500 employees, you can only claim the credit for wages that were paid to employees to not work. And this is where it comes in for the small businesses. If you have under 100 full-time employees, all of those wages end up being eligible for claiming this credit if you meet one of the qualifications. We get into calculating the credit. This is the fun part where you kind of start to see the significant impact the credit can have. For 2020, the credit is calculated as 50% of your first $10,000 of eligible wages paid to each employee during the entire year. So this leads us to a simple calculation of $5,000 per employee for 2020. And when I say eligible wages, that is equal to an employee's Social Security wages. So that's their gross wages, basically, at the simplest basis, their hours worked times their hourly wage. And you would reduce that by your items that are like your health insurance, your vision insurance, that type of stuff. That's pre-tax. For 2021, this is where the credit can really add up. They changed the way it's calculated to being 70% of the first 10,000. So that's $7,000 per quarter. And then this is eligible each quarter as well. So you can get $7,000 per quarter per employee, leading you to a $28,000 per employee if you had qualified for all quarters in 2021. So the credit program in total can be worth up to $33,000 per employee if you qualified for all 8 quarters between 2020 and 2021. This leads us to claiming the credit. So obviously you claim this credit on your payroll tax returns, and the ones for 2020 are going to be filed already. So you'll pick it up and you'll claim it using an amended 941 form, 941X. And you also need to fill out the worksheet one for the 941X as an attachment. If you're claiming for a current quarter in 2021, which at this point is going to be fourth quarter, with the third quarter payroll tax returns being due at the beginning of November there, you can claim it on your current 941 form if you qualify in quarter 4, 2021. Last thing to cover here is some special things to have on your mind when you're calculating these. As I mentioned earlier, at first you couldn't have a PPP loan and claim the retention credit. They changed those rules, but you can't use wages that you use to claim PPP loan forgiveness to also claim the retention credit. That's double dipping. That's not seen favorably in the eyes of the IRS. Another thing is that you can't claim the credit on wages paid to the owner of a business or their family members. A big item here, something to keep your eyes on and be aware of, is that wages that are used to claim the credit are non-deductible for income tax purposes. So you can't claim a credit on wages and then deduct them on the tax return as well. So you might end up, if you're claiming for 2020, you're probably going to have to amend your annual income or tax return, and you're going to end up showing more income, but a tax credit is always, or generally always, more favorable than a tax deduction. That leads me to our built-in disclaimer here. Calculating the credit is a bit complicated, and there's a lot of moving parts here that doesn't necessarily lend itself to being covered in detail in a presentation. But yeah, if you guys qualify, if you have your rough calculations together, reach out to your payroll people, reach out to your your accounting team, and run it by them, and then see where it lands from there, and get these credits claimed, because they can obviously be pretty significant. And that leads me to my final slide here with our opening it up for questions.
Thank you, Cody. I learned a lot. I was like jotting notes quickly. We will we have recorded this presentation and we'll make it available on YouTube after this presentation is done. If you have questions, please drop them in the box for Cody to answer. Well, I'm seeing no questions come through. I do want to thank our speaker today, Cody. You are a young professional. You are also part of our Wayne County Leads group, which is our new leadership academy. So we're excited to have you presenting today with Brady Ware. Are there any other, besides like the information you gave today, is there anything you'd like our audience to know?
Not necessarily. It's definitely have it on your radar. Go review your financials and everything for the past year. Think about if you had the government shutdowns that stopped you from having people in your stores, if you had to switch the way you operate at all, kind of have that information together, and then yeah, reach out to your CPA, your accounting team, and then see if you can get these credits claimed, because yeah, they can be huge.
I will just add that here at the chamber, we are fortunate enough to have Jennifer North be our board treasurer, and brought this to our attention. And Amy Waltz, who is our accountant and on here today, worked with her to apply. And we fortunately didn't have to be shut down too much because we were able to work remotely. But that said, our cash flow has changed because our program of work has changed. Our events landed in different months than normal, just different things that we normally do throughout the year. We're landing in different time frames. And because of that, we were able to qualify for 2 quarters of tax credits this year. And it was significant, even just for the 4 of us. So if you have very many employees, this can really add up quickly.
Bob, I see your hand is up. You have raised your hand. Do you have a question or a comment?
I was just going to offer a comment. Corey mentioned it. A lot of these credit programs, they get a lot of national news attention, and it's typically focused on commercial entities, particularly like restaurants and manufacturers that that have been hit very hard. But Cody recently was involved assisting one of our nonprofit clients, who, if I recall, Cody, didn't they end up receiving basically a credit that was in the range of $90,000?
Yeah, 90 to 95, I think.
So the important thing here, if you're on the call and you're associated with a nonprofit organization, or if you serve in a volunteer capacity, and I think this kind of dovetails on what Melissa was saying, just don't immediately think because we're not a tax-paying entity that there's no benefit here. Because we all know the nonprofit community's been hit pretty hard. And I know this particular organization was very excited to learn that they had the opportunity to receive, $90,000 essentially in cash from this credit. So, as Cody said, follow up with your, your accountants and your financial advisors, your payroll folks, to make sure that you're taking advantage of this. Thank you, Roxy.
Thanks, Bob. We do have a question in the chat box. What about small businesses with a single owner or employee? They were hit the most and yet still can't claim any credits? Question mark.
It's an unfortunate part of that rule, where it's basically those businesses were eligible for the PPP loan, and they're just specifically excluded from claiming the retention credit. And unfortunately, they just are unable to thread the needle and be able to get both, unlike some of the other programs, because of the exclusion but for the family members of the owner or the owner themselves.
Thank you, Cody. All right, well, we are going to give you a few minutes back in your day. If you do have questions, though, like I said, this will be available on our YouTube page where we keep all of our recordings of our webinars, or you can reach out to Cody. His contact information is on the page on the screen right now. If you have any other questions or would like to know more about the chamber, feel free to reach out to myself or visit our website, wcareachamber.org. Once again, thank you, Cody, for joining us today. I know this has a lot of information, but we are thankful that you spent the morning with us.
Thank you, Roxy.
Have a great day, everyone.